Donald Trump is kicking off his second term with some of the boldest policies we've ever seen. From international tariffs to sweeping federal layoffs and even proposals to abolish all income taxes. So in this video, I'm diving into the key policies from Trump and his new housing secretary that will have the biggest impact on the housing market. And at the end of the video, I'll share my personal opinion on how I think these policies could shape the overall housing market and how both buyers and sellers will be affected. Okay, so recently Scott Turner, a representative from Texas, was confirmed by the Senate to be the new U.S. housing secretary. And he has his own bold policies that he plans on implementing. So I want to lay out the 4 biggest housing policies that have been proposed by either Scott Turner or Donald Trump and explain the goals of the policies as well as the potential benefits and potential risks of each one. So let's start with their plan to reduce the government's role in lending. All right, there's 2 main ways the government is involved in housing finance. The first is that Fannie Mae and Freddie Mac have been under a federal conservatorship since 2008. So that means that the federal government makes all their lending decisions and collects most of the profit. The reason why this happened goes all the way back to when the government created Fannie Mae in 1938 after the Great Depression. Before 1938, banks would just have to hold their mortgages for 30 years until they got paid off. So this limited lending because they only had but so much money. And on top of that, when some banks failed from having too much of their money tied up in long-term loans, it caused people to panic and try to cash out all their money, which in turn caused even more banks to fail. And back then, there was no FDIC insurance. So if the bank failed, all the money people had at those banks were gone. This was a big part of the Great Depression. So to solve this problem, the banks would sell their loans to Fannie Mae. And then Fannie Mae would bundle those loans and sell them to investors as mortgage-backed securities. This allowed banks to have more money to lend and also ease their lending guidelines because now they were backed by a government enterprise. It also caused interest rates to be more of an industry standard because all the loans were getting sold to and backed by Fannie Mae. Eventually in 1968, the government privatized Fannie Mae and 2 years later also created Freddie Mac to compete with Fannie Mae. So at this point, they were both private companies but government sponsored, meaning they had federal support but can now create their own lending guidelines and collect their own profits. After this change, the company skyrocketed in size because they had the benefits of being a normal for-profit company, but without the risk of complete failure like a normal company would have. So essentially, they took on too many risky loans from unqualified borrowers, knowing if they needed it, the government would bail them out. And in 2008, that's exactly what happened. Over time, lenders took on riskier and riskier loans because they knew they could get sold on the secondary market. And Fannie and Freddie were okay with that because they knew they had government backing. Since it was easier for people to buy a home, prices grew. And when people started defaulting on their mortgages because they were beyond their means to pay them back, the whole housing market and mortgage system crumbled on itself. So the government injected its own money into Fannie and Freddie to bail them out since they were such a large portion of the mortgage market and they wanted to prevent even worse damage to the entire economy. From that point, when they bailed them out, they have had a conservatorship in place and fully control all their operations. The other way the government is involved in housing finance is directly insuring or guaranteeing a loan. So that's like a FHA, VA, or USDA loan. If someone defaults on these loans, the lenders face minimal risk because the government reimburses the majority of any losses not covered by the foreclosure process. Since the government is backing the loan, they also decide what the requirements will be for each type of loan. So one of Scott Turner's main proposals is to reprivatize Fannie Mae and Freddie Mac and reduce the government's role in lending overall. Now, he hasn't specifically said he wants to reprivatize it like it was before 2008, when it was a private company with government ties, or a full privatization with no government backing that we haven't seen before. But one of the big reasons he supports privatization is to take the risk of lending off of the taxpayers. So that would imply once they're private, if something happens to Freddie and Fannie, he doesn't want the government and taxpayers to help. Secretary Turner hasn't said anything specifically about the direct government loans either, but there have been reports he plans to cut the workforce of HUD in half, which probably indicates he wants to scale back the amount of direct government mortgages and pass more onto private lenders. So the main goals of reducing the government's role in lending are to privatize Fannie Mae and Freddie Mac, scale back direct government loans, and work towards a fully private housing finance system. The potential benefits of this policy are less risk to taxpayers, because if the market has a downturn, the private company will have to deal with any losses, not the public. Encourages a free market-based mortgage system, so the private companies will be responsible responsible for considering their own risk instead of just relying on the government as a backstop. The free market also creates more competition between lenders, meaning potentially more competitive loan terms and more innovative loan products. The potential risks of this policy would be stricter to qualify, because if these private companies need to take on the risk if someone defaults, it may cause them to tighten their standards. Also, the private lenders are obviously going to favor high income, low risk neighborhoods, potentially leading to more limited loan access in rural or low income areas. Another risk is rates may rise because government backing helps reduce risk, keeping rates low. This could also cause overall less stability in the housing market because of this increase, especially during recessions. And all of these factors could lead to lower home ownership rates across the country. The next policy from the administration I think could have a large effect on housing is tariffs. Now, tariffs are a fee that get paid anytime something is imported to the US from another country. As I'm recording this video, the current tariff situation is a 10% baseline tariff on all countries except for Canada and Mexico. And for China, it's up to 145% for certain imports. The goals of tariffs are to boost American manufacturing because increasing the price of foreign goods makes US products more competitive and incentivizes companies to move their production to the US. Also reduces dependence on foreign countries, and it's used as a negotiation tool to create more favorable trade deals for the US. The potential benefits this could have on the housing market would be increased US manufacturing of building materials, so over time that could lead to more efficient supply chain, reduced delays, and increased housing inventory. Also, more jobs could be created, improving the economy, which would boost housing demand and ownership rates. The potential risks of tariffs, especially in the short term, would be higher construction costs, which could cause the builder to pass these costs onto the consumer. Fewer homes could be built because with the higher costs, some builders may not be able to complete as many projects as before, worsening the housing supply shortage. Jobs could also be in jeopardy from retaliatory tariffs other countries place on us, weakening our own economy. And inflation in general could rise, which would make interest rates increase. Okay, now back to direct housing policy. Let's go over their plan for deregulation and reducing zoning restrictions. So similar to decreasing the government's role in lending, Scott Turner also wants to limit the government's involvement in housing construction. This would likely mean Environmental Policy Act reforms to speed up permitting for housing construction, and also reducing HUD or any other federal agency's requirements for builders to receive federal funds. As far as reducing zoning restrictions, this will most likely include incentives for local governments to ease zoning barriers, like allowing duplexes, triplexes, or ADUs in previous single-family only zones. Also, they'll most likely encourage local governments to relax height limits, lot sizes, and parking minimums. The main goals of this policy are to increase housing supply by making it easier and faster to build more homes. Also, loosening zoning restrictions will increase housing supply too by allowing more density in high demand areas. Lower construction costs by cutting down delays and expensive permitting process, and increase affordable housing by increasing overall supply and reducing builders' costs. The potential benefits of this are more housing options for all income levels because small multifamily and ADUs mean greater housing diversity. Faster and cheaper construction, more efficient land use, so essentially being able to put more housing units on one lot, and all of these things lead to more affordable housing. The potential risks of this are overdevelopment. Too many people in one area can strain public services. Neighborhood pushback. A lot of people don't want affordable housing around them because it could negatively affect their own property's value. And also potentially lower safety and quality standards from less government oversight. Now, it's one thing to make it easier to build, but the administration wants investors to put their money in affordable housing specifically. So the next policy is incentivizing private investment into affordable housing. During Trump's first term, the two main ways he rewarded developers for investing in lower income housing was the low income housing tax credit and utilizing opportunity zones. And this time around, he's looking to expand both programs. So the low income housing tax credit is when private developers make a deal with the government to build or rehab housing and reserve a certain number of units for low income tenants. When developers agree to this, the government then rewards them with tax credits that the developer can sell to investors like banks or corporations. They then use the money they receive towards their construction costs. Then those specific units must stay affordable with rent caps for 15 to 30 years, depending on the deal. And in return, the developer gets a reduced tax bill for the next 10 years. Opportunity zones are a little different, but with the same goal. Scott Turner helped lead the Opportunity Zone initiative during Trump's first term, so I'm sure it'll be a big part of their plan as well this time around. Essentially, it allows investors to defer their capital gains tax if they reinvest their profits into an opportunity zone. which just means a low income area. For example, if you sell any investment that would trigger capital gains tax, like real estate or stocks, you can reinvest your profits into an opportunity zone and defer your capital gains tax into the next year or whenever you sell, whichever comes first. If you held the property in the opportunity zone for 5 to 7 years before selling, you would pay reduced capital gains tax. And if you held for over 10 years, you would pay no capital gains tax on any profits made from that property. Now, that was all part of the Jobs and Tax Cuts Act of 2017. So a lot of that has changed or expired, and it's looking to be revamped or expanded this year. So the goals of this is to increase supply of affordable housing, revitalize distressed communities, reduce direct government spending, and use the efficiency of the private sector instead of government housing. The potential benefits of incentivizing private investment in affordable housing would be more affordable housing units getting built and also done faster, improving local economies of distressed areas, and long-term investment in affordable housing. The potential risks are displacement because revitalizing the community may push housing and rent prices too high for the income in the area. Now, as far as what I think the impact of the Trump administration on housing is, I think not much would change if Fannie Mae and Freddie Mac were privatized as long as they kept their standards and procedures the same, but I do believe the direct loan programs are good for both buyers and the government. I think if these were totally taken away, most lenders would raise their qualification standards significantly for buyers, and pretty much everyone would have to qualify for a stricter standard conventional loan. For tariffs, I definitely think in the short term we would see price increases from supply chain disruptions, but over time I could see it being beneficial for the overall job market and reduce reliance on other countries. I also think a lot of these tariffs are going to be uplifted after negotiations and more favorable trade deals are agreed on. So it could end up not having a big impact if it's on either just a few countries or on a few specific products. But reducing zoning restrictions, in my opinion, is the quickest and most impactful way to help ease the housing affordability issue. If the administration can incentivize the local governments to allow ADUs or more units per lot, I think that would be the biggest win-win-win for investors, buyers, and tenants. Because it would help ease rental demand, softening rent for tenants, and allow investors to add more units to pre-existing properties, or have more 2 to 4 unit properties available for purchase, which are a lot more efficient for rental investors. Also, it could make it easier for buyers to qualify for a home if the other unit's rental income helps boost their debt to income ratio. As far as deregulations for development, I definitely think it will help the lack of inventory by streamlining the process, because like most things, usually less government equals more business. I also really like the idea of incentivizing private investment in affordable housing. I think that opportunity zones and low income housing tax credits are great for creating and improving affordable housing. So I would like to see them expanded and pushed even farther this time. In my opinion, these not only help with housing, but are a step in the right direction for improving the entire economy of these lower income areas. Regardless of how many of these incentives actually get put into place, they are just scratching the surface of the overall tax benefits that the government has in place for all types of real estate investing. I cover how the current president himself used those tax benefits to offset his own income in this video. And if you need help buying, selling, or investing in real estate, all of my information is in the description.